if you are trading right now and find it a little frustrating, there's a couple of things you could do. Number one is drop down to lower time frames to find a trend. And let me just put that on pause for 1 second there. So what I mean by dropping a time frame, obviously this is the daily chart here. We're going to push it down to an hourly chart. We're going to look at the last 3 days, and we're going to combine the last 3 days with 5-minute charts. Now essentially what a trader will do in this window here is, if you're not finding follow through on the higher time frames, you'll actually drop down to the hourly time frame and use the hourly time frame as your actual trend indicator. And we can actually take that a step further. I want to go over to this day here specifically. We're going to do multiple days, but I want to just briefly talk about this. So let's say, for argument's sake, the stock opened there. We have two things in our favor right now. For the entire day, the stock trades below the open, so that means that the current intraday order flow is selling pressure. And then we have these individual hourly candles as well. So just as a pure day trader, now not necessarily a scalper, but absolutely a pure day trader, this combination right here, trading on whichever side of the open it is and wherever the current hourly candle is trading, you could then drop into the 5-minute, 15-minute, 10-minute chart and only look for signals in that direction. So below the open, bearish hour, bearish hour. So these first 2 hours of the day you could have traded short, would have done nothing here as long as that candle was green. Could have traded here short as well. It was red. It probably would have got chopped around a little bit, and you can see that here. And then we have a big trend push to the downside. Another push to the downside, which we actually hit longer term resistance there, if you remember, on the daily chart. So pretty good multiple time frame analysis there, and a bounce. So this bounce here you probably would not have participated in. However, you did have 1, 2, 3 solid hours intraday where you could have absolutely have taken advantage of some shorter term trades. Now, if we take that same thought process and go over here, now we know longer time frame, we're in a bullish tape. So we have a bullish tape above the open, gap higher, which is also above the previous day's high. So a couple of good reasons to consider being long there. You have 1 hour, 2 hours, 3 hours of green candles there. So the first 3 hours of the day you would have traded long. Again, gap higher above the previous day, longer term bullish tape, clearly above the open here. Now you start to have a red candle, so 2 hours of doing nothing. And why do I say do nothing? You should be, at this point, bullish and bullish long term. So you're only looking for buy signals now on your 5-minute chart. So bearish hour, do nothing. You're looking for nothing. Bearish hour, do nothing. We get a bullish hour, which is this little blip here, so you could have participated there. And then the last hour was also bearish after we had that push higher. So you had 1, 2, 3, 4 hours out of 6.5 that you could have been bullish. Now, interesting trade here set up as far as weighing out what days to be long or short here. Again, we're just talking about a strategy to drop down if it makes sense for you, if you could make good decisions, and if your cost structure warrants it. After a very bullish day, yesterday, we have 1, 2, 3 hours in the morning of bearish tape. Also, and again, the filter below the open as well as the hour. And you would have dropped down and looked for entry signals, probably the shooting star. We have a swing high here, another swing high here. So 3 hours worth of selling here, leading into lunch, leading into another selling hour, leading into an hour of doing nothing, which is essentially these push higher here on the 10-minute chart, and then one last push into the close. So if you're finding it a little frustrating, that's a great way to, you're not changing your style, you're still picking an edge, and you're only trading on one side. Essentially what it's allowing you to do is to adapt to make income without necessarily adding to trades. And it's a very, very clear strategy of taking those intraday trades with change from the open and where the previous hour is. So what we're going to do now is we're going to take a look at stocks that are in play today in earnings and see if we could come up with some pretty good technical setups on that.